Good afternoon. I'd like to welcome everyone today, a beautiful summer's day. I appreciate everyone taking some time out to join us. Today we are going to be going and diving into the business markets. With $11.1 billion going into life insurance markets on an annual basis, the opportunity is seemingly endless for the continued premium to be coming in and opportunities for advisors to go out there and find new clients. So I really wanted to go into a solution today that I feel like is brought up. I get questions on almost on a daily basis. Key person, buy, sell, executive bonus, golden handcuffs. What's the difference? How do I position? How do I market? What do I do, right? And our jobs as advisors, wholesalers and marketers doesn't necessarily mean we have to be an expert on all of those. We just have to have enough info to make ourselves dangerous. So we can go out there, we can spot those opportunities, have an educated conversation with the client, and then come back and circle back with someone like myself or my colleague Matt, or even Aller, who I'm going to have on the line here, is going to help talk us through some of these solutions. So again, we're going to really just dive into those concepts and try to make sense of everything. Aller, you on the line here?
I am.
Hi. All right. Well, he is a specialist over at North American. I've worked with Aller in the past here. I know he really knows his stuff, so I asked him to come on a call today, do a little presentation, and go over some of these solutions. So with that, I'm going to go ahead and get him started. I'm going to keep all questions till after the fact, so you can circle back with myself, and we can dive in. I'll get you these the slides that we're going to go over and fill in any gray areas afterwards. But I'm going to keep everyone on mute. That way we just can flow through this and we don't have any birds chirping or horns going off in the background. So yeah, let's get going here and talk a little buy, sell, key person, executive bonus.
Thanks, Craig. As Craig mentioned, I'm the dedicated internal here at North American that works with your guys' group. So if there are specific questions you can't get a hold of Craig, certainly you can reach out to me here at North American. I can hopefully answer any questions that you might have. Today we are going to focus on the business marketplace, and I love the business marketplace. I think North American, first of all, has a great product mix that works well in the business marketplace, but also we have a lot of great tools and training materials for you to become very successful in the business marketplace. One of the things that when I was a advisor and working in the sales field that I worked very hard was the business marketplace. I liked the daytime activity. I liked the fact that the business owners had deep enough pockets that they could afford the solutions that you were proposing. And again, if you find the right mix with the business marketplace and the right company, that I think North American has great products and great support for you, you can be very successful in the business marketplace. Think about, as we're going through this presentation today, just people that you deal with in the business marketplace on a day in and day out basis. It could be, the local gas station where you buy your gas, the restaurant where you buy lunch or dinner. These are all business owners. These are people that run a business and have needs that life insurance can be a solution for. So just as we're going through, just think of the bigger picture of the people that you deal with on a day in and day out basis. Maybe it's where you bought your last car. I mean, those are all business owners, and those are all people that could be potential clients for you. So start thinking of those as we're going through, and maybe even jot some names down as we go through, and maybe it could be a jumping off point to create your success in the business marketplace. So with that being said, we are going to cover 3 different topics today. First of all, we're going to talk about buy, sell. Then we're going to get into talking about executive bonus arrangements, and then we'll talk about key man as well. At this point, I don't have any slides on the key man, but we will discuss that and throw that in as an additional benefit that you can be proposing to your business clients. So anyway, talking about the success of any business really depends on a smart strategy and planning. You know, whether the client owns a big company or a small family operated business, if the unexpected happens and one of the business partners may be forced to work with the deceased partner's family, that's not a good situation. For example, in this slide here, you can see we've got Andy and Zach, our business partners, and let's say Andy passes away, and now we have Zach being business partners with Andy's wife. Is that a good match? Is that a good fit? Is Andy's wife capable of coming in and running the business and taking over? Is there going to be conflict there? Most likely, yes, there will be. And so having a good solid buy-sell agreement in place helps the business partners determine ahead of time what they want to do, so that when the event does happen in the future, there is a plan in place and there's a funding mechanism in place as well. And that's what we're going to talk about here today. So our agenda, we're going to talk about, buy, sell, and funding it with life insurance. We're going to go through a case study and then share some tools that North American has to make you the business expert in your marketplace. So let's jump in here. First of all, talking about buy-sell funding with life insurance. One of the things, I guess, when I was selling was meeting with a business owner and asking them if they had a buy-sell. Of course, many times they would say, yes, I do. And then you'd ask them, how is it funded? And then they kind of give you a kind of quizzical look and they're not really sure what you mean. And a lot of times they'll sit down with the attorney and draft a buy-sell agreement, which states their intentions of what they want to have happen if something were to happen to one of their partners. But if they don't fund it, it's a piece of paper that, they have to follow through on, but how do you pay off, how do you buy out your partner's widow from their interest in the business? By having the life insurance in place, we can make sure that what their intentions were on their buy-sell agreement ends up being translated into a fully funded plan. Anyway, the buy-sell is actually a legal agreement that is drafted by an attorney, so it's not something that you as the insurance agent are going to come up with. They're going to go to their attorney and draft that agreement. You're going to be coming in with the funding mechanism for the buy-sell, and that's where the life insurance comes in. So the buy-sell agreement can help protect the business clients from the unintended or unwelcome transfer of their ownership. So it can also help protect the heirs by providing the opportunity to turn that inherited business shares into cash, which most likely they would rather have the cash than the interest in the business. And then in our example of Zach and Andy, when Andy passes away, Zach is going to use the death benefit on Andy's life to buy out the business from Andy's wife, meaning she's going to get value for her shares of the business, and then her shares are going to transfer back to Zach. Zach's going to take over full ownership of the business. And it can also help the surviving family members or owners fund the transfer ownership of the business. So again, everybody knows ahead of time what's going to happen, and most of the time the family of the deceased partner would rather have the cash and the value rather than the interest in the business anyway. So that makes sense.
Indeed. What would you say valuing the business is part of that equation as well? I mean, I don't know how many cases we've ran across where they want to set up a buy-sell, but they haven't even asked themselves the very most important question is what is our business worth? How are we going to, not just how are we going to structure this policy, but it helps those business owners really sit down and either work with their CPA or sit down together and put their heads together and figure out, okay, what are we going to value our business at? Is it worth $1 million? Is it worth $100 million? And it helps them quantify that as well, which is a hugely important part of the question. And I know that there's multiple carriers. I think North American is one of them that have tools that helps us as advisors go out there and help them put a value on that business as well.
Well, you bring up a really good point, because back in the old days, I used to see a lot of buy-sell agreements that would actually list a valuation in the buy-sell
Mhm.
agreement. It would say our business is worth $1 million and we're 50-50 partners, so each of us has a $500,000 stake in this business, and they would put that as their value in the business. Well, if it's a growing business, and let's say 5 or 10 years down the road, one of the partners passes away, and now the business is, quadrupled in value, and your buy-sell
Right.
agreement says you're going to buy out the other interests for that amount of $500,000, that's not really very good. So most recently now, most attorneys are very good about putting formulaic valuations in the buy-sell. Percentage of
Mhm.
sales, percentage of this, percentage of that, and they usually put a combination of those into the buy-sell as to the average of those different valuations coming up with the value. But yeah, that can be a real problem if they've got an old buy-sell and they put an actual dollar amount in there. Make sure that they go to their attorney and get that changed, because that could be very negative for the surviving person's family. Anyway, again, why life insurance? Obviously, it provides that immediate death benefit protection, which is what the key thing of life insurance does for all of us. But again, the surviving owners of the business, they must have the funds available to buy that deceased person's portion of the business back from the heirs, and the life insurance is going to come in at exactly the right time with exactly the right amount of death benefit to provide that amount. So life insurance also is cost effective, pennies on the dollar you're buying that business for. It's relatively simple to set up with life insurance as the funding vehicle, and generally provides a tax-free benefit of the death benefit to the owners of the business. So lots of great reasons to be thinking about life insurance, and we're going to talk about even a few more as we go through this presentation. Who can benefit? Obviously, you think of the business owners themselves are the partners of the business, are the ones that are going to really benefit, but it could also be future owners of a business that can benefit. People that maybe are key people in the business and maybe want to eventually buy the business in the future. We could set up buy-sell agreements with non-owners even if we wanted to do that, and could set up a legacy type operation with those key people in the business. Could be the heirs. Obviously, the heirs are going to be much happier usually with cash rather than shares of the business and all the headaches and hassles of running the business as well. So everybody can benefit by a fully funded buy-sell agreement. We're going to talk about two different types of buy-sell agreements here. The first is the cross-purchase agreement. This is when you have a few owners of a business. This is probably the preferred method of setting up the buy-sell agreement. The only hassle that becomes with the cross-purchase is if you get too many owners, and then you have to have way too many life insurance policies to do a cross-purchase. It just becomes cumbersome. So the cross-purchase is very good for 1, 2, or 3 owners. It's easy to set up, and there's a lot of advantages of doing that. So if we look at this, first of all, the cross-purchase, we have owner A and owner B here, and they enter into their buy-sell agreement to sell the business to the other owner if something were to happen to them. So what we have is owner A buys a policy on owner B's life, and he pays the premium to the insurance company, and the insurance company, if owner B passes away, provides the income tax-free death benefit back to him. So he's got a pool of cash that he can then go to the heirs down here of owner B and give them the cash. They in turn give him back the interest in the policy. So again, that's a very straightforward, simplistic cross-purchase agreement where each of the owners owns a policy and is the beneficiary of the policy on the other owner's life. And if something were to happen, they receive the proceeds from the insurance company, and they in turn take that cash to the heirs of the owner that passed away. Let's look at a quick hypothetical example using a company called Grilling Inc. It's a retail store. It's set up as a C Corp. They supply local chefs with grilling gadgets. They have 35 employees, so a nice sized business. Andy and Zach are equal shareholders in this business, and they desire to keep the ownership closely held. So obviously, they want that ownership to transfer to the other owner if something were to happen. Here's a quick picture of a North American. I apologize, some of these numbers are a little small, but again, if we look up here, this is a buy-sell that Zach has set up. He's going to buy the policy, or this is just a shade over $1 million with a $20,000 annual premium. And you can see over here on the far left corner, the death benefit of just over $1 million is what's going to be payable to Zach if something were to happen to Andy. So we've got a 45-year-old male, preferred non-tobacco. We're going to pay the $20,000 for a 20-year time period. And so we're going to not only have the death benefit here, but we're also going to show a growth in the cash value account of the account as the premiums are continuing to come in. The advantage now that you have is that you have Zach able to buy out Andy's share of the business, and the heirs are going to get the cash for the business and not have to deal with the issues of running the business on a day-to-day basis.
I like how you used the IUL in this concept. I think this is a great way to really talk about buy-sell, because there's so many things that can happen within that business, within the business owners, right? What if they sell the business? What if the business doesn't work out and they fall victim to having to dissolve the business and they're no longer in? At least with you're showing an IUL here that they have a policy that they can fall back on later in life, right? Whether it's whatever happens. Yeah.
For instance, you here we're showing the cash value growth in the 50 year, 62,900. What happens if one of the owners becomes disabled and
there you go.
A car accident? They really can't. They're not dead. I mean, we didn't pay the death benefit, but now there is a disability. They can't work any longer. So it's basically up to the remaining owner to take over the business. Well, they don't want that person that's disabled being a 50-50 partner in the business any longer. They want to be able to buy that person out. And again, the cash value in the account allows them to at least have a pool of cash that they can start drawing on to fund the buyout. Not necessarily the 100% buyout, but again, it does open up the possibilities of everything other than a death buyout. Again, like you mentioned, retirement or disability, or there's other reasons where somebody just might tire of the business and want to leave. Those are all situations where the cash value component of a permanent plan of insurance can really create a nice pool of cash that they can use to fund that buyout. And then here's a third scenario. This is a different one. I mean, what happens when one of the business owners gets to the point where they want to retire, and we no longer actually need the life insurance to fund the buyout? We could actually transfer the policy to the insured instead of having our cross purchases. Now we can transfer it to that individual. They can take that policy and they can use it for maybe supplementing their retirement income. I mean, there's a lot of things that you can do with these IUL contracts, especially with the strong growth opportunities you have with the cash component in the future. So again, at retirement, you might have an opportunity to just walk away and take that policy, swap the policies out and use that policy to supplement your own retirement income.
And this is your new version of your Builder, correct?
Yep. Builder Plus is what we call the new opportunity.
Okay. Yeah. Interesting product here, folks. North Americans always had one of the strongest IULs out there. It's always spreadsheeted really well, but the new version of this It's really jumping off the pages, and we don't want to make this. I don't want to make this a product webinar. This is more business solutions, like we talked about. But we can definitely dive into that on a one-on-one basis after this call. It's certainly it's strong. It's showing number one or two in almost every scenario that I've been running the last couple months. When did that come out, Oliver? Was it May that product dropped?
It was actually in April. Yep.
April. Okay.
Mid-April. So it hasn't been out very long, but it is already our number one selling product. So it's really taken off in the marketplace.
Yeah, and I see you guys as carriers just fighting tooth and nail every single quarter. I mean, $2.6 billion a year going to the IUL industry. It doesn't take a rocket scientist to figure out that these carriers, North Americans, the Alliances, the Pac Lifes, the leaders of the IUL world are going to consistently try to fight for as much of that market share as possible. So I think that's great for us as agents and advisors, because we're constantly getting new products and updates to their products, making it better for our overall clients and making a product that's better for us to sell in the field. So, North American right now, every 6 months, I feel like it's changing a little bit of who's coming out best. But right now, North American is, they are one of the top one or two carriers, in my opinion, today. So, good job with that product development, guys.
Certainly appreciate that, Craig. Yeah.
Yeah.
Real quickly, the other type of buy-sell agreement you're going to run into in the marketplace is the entity purchase agreement. And this is basically where the company itself is buying the policies on the owners, and the company itself is redeeming the shares of that deceased owner's business. So here you have they enter into the buy-sell agreement with the company, not with the other owners, but with the company. The company itself pays the premium to the insurance company. If something were to happen, the insurance company then pays the proceeds of the policy back to the company. And now the company goes to the heirs of that deceased individual and redeems the shares of that business from the heirs. So instead of the owners doing it directly, it's the company dealing with the owners. This can be a situation where you have many owners. Maybe you've got a company that has 10 owners. It would become cumbersome to do cross purchases with that many owners. But with a company entity purchase agreement, you can set it up that way and make it work with the company as the owner of the policy. So it becomes just a much more streamlined way to set up the buy-sell agreement when you're dealing with multiple owners of a business.
Would you say, I see, at least personally, I'm seeing more come in, buy-sells set up as cross-purchase. Would you say you're seeing that as a carrier as well, or are you guys seeing more of a 50-50 between cross-purchase and entity?
I would actually say the cross-purchase is the preferred method. Mm-hmm. And the reason I say that is because if the cross-purchase does get implemented, the remaining owner that purchases the shares of the deceased person's interest in the business, they get a step up in basis in the cross-purchase agreement, whereas in the entity purchase agreement, they do not. So for instance, let's say you had two people start a business and they each threw in $50,000 to start the business, so the business is worth $100,000. Let's say the business grows over time and eventually it's worth $500,000, and one of the owners passes away. They buy out the interest for, it'd be $250,000, their half interest in the business, but they don't get a step up in the entity purchase. So if it's a cross purchase, the surviving owner, his basis in the business goes from his original $50,000. He bought out his deceased partner's interest for $250,000. His interest now is up to $300,000. That can be very valuable when it comes time for the surviving partner to sell their business. That step up in basis is only available on the cross purchase, not on the entity purchase. So again, if it's doable, I would say most people would prefer to do the cross purchase. But again, it can get too cumbersome if you get too many owners in the business.
Multiple owners, 6 different got ya. Okay.
Yep. And then the last one we're going to talk about is the one-way buy-sell agreement. This is where you just maybe have one owner, a sole proprietor of a business, and they maybe have a key business partner, not a partner, but a key business individual that would eventually like to take over the business, they can enter it into an agreement with a non-owner and set up a buy-sell agreement that basically says, you know, if one of these triggering events happens in the future, I would like you to step up to the plate and buy my interest in the business. And so that's the way you can set up a one-way buy-sell agreement with a sole proprietor. So don't be thinking because a business is a sole proprietorship, they don't have a need for a buy-sell. They may, and they may have the person that's the ideal candidate right there in their business that wants to step up and wants to own that business in the future. And you can set up a life insurance policy to fund that policy or that eventuality as well. So again, just be thinking outside the box and be thinking outside of just the normal, partnership relationships. It can actually work with a sole proprietor as well. All right, North American has, I mentioned this earlier, a bunch of tools available for you to become more proficient in the business marketplace. We have, first of all, our marketing website, and at the top of the screen there, you can see it's got a very long website. It's nalife.northamericancompany.com/na-marketing materials. Wow, it's a very long website, but this website is a website where we deposit all of our marketing tools, everything from videos to the brochures to the marketing guides to the client pieces, the fact finders. All that is housed on this one location, and it does not require you to have a user ID or password. It doesn't even require you to be contracted with North American at this. You can actually access that website without a contract with North American. Lots of great tools available. Under the sales concepts, it'll have I think there's about 14 different sales concepts listed there. Business marketplace is just one of them. And we do have great videos and things available that you can use with your clients to talk about the benefits of the buy-sell agreement or the executive bonus arrangements or things that we have. So if you've had a chance to jot that whole long web address down, nalife.northamericancompany.com/na-marketing materials. That's a great place for you to go and look at some of the materials that we have, and again, use those in your practice. And I think you'll find that it's very valuable to have at your fingertips. The other thing
I would definitely bookmark that on my cell phone for everyone on the line here. If you're on a meeting or somewhere on a Friday or a Saturday night and happen to run into a potential client and they have a little concept that you haven't worked with or just not that knowledgeable on it, you can watch literally a 2-minute video and get you enough to be dangerous. It's a great website. I've used it continuously. And it's one of the better ones out there that isn't locked. Most of the carriers, they lock it. You can't get in. And this is just, it's open. So great tool. I would definitely bookmark that. I'll make sure to send that to everyone that's on this call as well today.
Sounds good. The other tools that we have something we call the Sales Concept Playbook. Again, with each of our sales concepts, we've put together this playbook, which actually goes through the concept, goes through the key selling points, some illustration design tips as you're sitting down and trying to design these cases. And then over on the right-hand side is right words, right questions. There's a lot of great questions to ask as you're talking to the business owner client. And again, this is a free tool that you can use. This one is actually on our regular website. So if you're already contracted with North American and you can sign into our regular website, you can download a copy of the playbook. And again, I think it's a really valuable tool in not only just the buy-sell agreements, but all of the various sales concepts that we have with North American. So I am going to switch gears one more time here and go into talking about the other concept we're going to discuss here with the executive bonus. And again, executive bonus is another tool that you can have in your briefcase to talk with the business owner clients about. It's basically taking a look at their key people that they have in their business and trying to say, I don't want the company across the street or across town to be coming and taking my best people and recruiting them away from me. I want to make it so that I'm giving them excellent benefits and they're never going to want to leave because the other company can't match the benefits that I'm offering. So the executive bonus is going to be one of those kinds of tools that is going to be a retention tool. It could also be a recruiting tool for that company if they wanted to use it as a recruiting tool to bring somebody in. But it's a very excellent retention tool to keep your best people with your company. And again, we'll talk a quick case study, and then we'll show you again some of the tools that we have in the executive bonus arena as well. The first thing that I like about executive bonus is it is a discriminatory benefit, meaning you as a business owner can pick and choose who you want to offer a benefit to. You can take your best people and offer them this benefit, and you don't have to offer it to everyone. So again, with the discriminatory nature of the executive bonus, pick and choose who you want to offer to. You can give multiple people different levels of benefit. You don't have to give everybody the same benefit. Again, that really makes it very good for the business owner himself or herself to pick and choose who they want to offer it to. Obviously, rewarding and retaining those valued people so that, again, nobody can come in and steal your best employees. And it's simple. The great part about executive bonus, it's probably one of the most easy to understand concepts out there as far as setting it up and maintaining it. Very easy to do, and yet it's a very powerful benefit to retain those key people. So again, why life insurance? We got the immediate death benefit protection that we can provide for that key person's family, because the executive gets to name their own, they actually own the policy and they get to name their own beneficiary. The future potential income for the executive. Now, again, we talked about using an indexed universal life product for this, meaning you got not only the death benefit, but you have cash value growth over time, and that cash value then can be used for supplementing retirement income for that executive. And the way we structure the executive bonus arrangements, they're tax deductible for the business, and they become taxable income for the employee because the employee owns it. The business has no interest in the business other than the fact that they're paying the premium, and they get to deduct that premium as a business entity. So who benefits? First, the business is hoping that they're going to protect them from losing their valuable and key people, because the departure of a key person can cause them to lose key accounts, key sales, vendor confidence. Sometimes the banks even pull back on credit. All those types of things can happen if you lose a key person. So the bottom line is we don't want to lose those people. We want to give them a benefit that's going to keep them tied in with the employer throughout their working career. And then the executive gets the benefit from the employer is going to benefit because they're going to now own a policy that they didn't have before, so they're going to have the death benefit protection for their family and their survivors. No out-of-pocket cost to them generally with an executive bonus. We're going to talk specifics here in just the next couple of slides on how that works. And then later at retirement time, they can use that policy to supplement their retirement income. So again, lots of really good benefits for the business owner and the executive. Again, here's a quick example of how this works. You've got the company is paying the premium to the insurance company. The insurance company issues the policy on the executive's life. They own their own policy. They have full access to the cash values of the policy, and then they get the tax-free death benefit when ultimately the executive passes away. So pretty straightforward on how the concept works. here's a, again, quick hypothetical on a company called Go Golf Inc., maker and distributor of golf carts. They have 400 employees, and Daniel, who's not an employee, he's not a principal of the business, but he's a key employee, is the person we're going to be focusing on in this example. Go Golf proposes a bonus plan for Daniel so that a company across town doesn't come and offer him and steal him away, offer him a better benefits package. So here's, again, what it might look like for Daniel. He's a 44-year-old male, standard non-tobacco. Again, funding at $20,000 a year for 20 years. You can see we did this with an increasing death benefit option. It started at about $440,000, and over time, over this 15-year time period that this page is showing, it grew to almost $900,000 of death benefit. The cash surrender value grew from almost nothing all the way up to $469,000 by the 15th year. Again, you can see how the benefit of Daniel owning this policy himself, he's protecting his family with the death benefit. He's getting the advantage of this growth in the cash value over his working years. And now it's going to be very difficult for somebody else to come in and offer him that kind of a same package. So you can see here, using the life insurance for the executive bonus, we've got that increasing death benefit going throughout the years and creating that benefit for his family. And here, if we look at the cash value columns, you can see how the account value, surrender value grows over time as the business continues to fund his executive bonus plan. And again, depending on interest rates and how things play out, he's still going to have more in his account value than the company paid in premiums eventually. So it's going to be a real good benefit for him for supplementing his retirement income if he wants to use that for supplementing income. Here we're showing the next page of the tabular detail of the policy, and we can show how he can start taking distributions once he reaches age 64. And again, it's showing here $85,584 as the amount that he could take as a variable loan from his policy to supplement his retirement income, and this would continue all the way out to age 100, and the policy would still remain in force, assuming that 7% return on the far right column over here. So again, he's also, probably funding a 401k plan. He's probably also getting Social Security benefits. So he's setting himself up for a very nice, comfortable retirement, utilizing the 401k, the Social Security, and now his own executive bonus plan that was funded by his employer. So again, we talked about the company here was a 400 employee company, but what happens if you've got smaller employer groups? There's a lot of small employers that have valuable employees that they would hate to lose as well. Executive bonus works just fine in a small employer setting as well. And here we've got, again, we're using the same name here, Go Golf. They make golf carts, but this company, and now we're saying, is only a 10-employee company. And we have maybe a sole proprietorship here. And here we're talking about Daniel, instead of being an employee of the company, he's the owner of the company. So we're looking at this a little bit differently now. We're using the company checkbook to provide a benefit for the owner of the company through a bonus arrangement. And so we're switching gears a little bit here. Instead of using the Builder Plus product that we've been showing already today, we're going to change products and use what is called our Rapid Builder. And we've added this waiver of surrender charge option, WOSC, waiver of surrender charge. What that does is it throws the surrender charges out the window even from the first year of the contract. And you can see here the very first year is $19,589 of account value and exactly the same surrender value because we added the waiver of surrender charge option. And so what we're able to do is not only give the business the advantage of strong early cash with the Rapid Builder product, but we're also able to do a table shave. Now this is interesting because when you do the Rapid Builder with the waiver of surrender charge, you also get a table shave option of up to table 3 brought back to standard issue. So perhaps if you're doing multiple people in a business and one of them happens to be a little unhealthier and might get rated up to maybe table 2, table 3, you can use the Rapid Builder with the waiver of surrender charge to bring them back to standard rates and kind of levelize the playing field for the multiple people that we're setting up this bonus arrangement for. So again, there's, depending on the client and what we're trying to accomplish, we might switch gears and go to a different product with North American because that might be a more advantageous way to set it up using the Rapid Builder. And again, here's the disadvantage again with the Rapid Builder is the income is going to be less because we gave a lot of flexibility and liquidity and a lot of money up front in the contract, but in the back end, it doesn't perform as well as the Builder Plus. The Builder Plus is designed to not have as much early cash, but have a lot stronger distributions on the backside. So again, it's a call you're going to have to make as you're dealing with your business owner clients as to which product is going to be the best product. But again, it still creates a very strong $55,000 income amount on an annual tax-free basis for that executive. So again, think about that as, you know, not necessarily always focused on one product, but there can be other product solutions that might work out best for that particular individual. Again, we have the same, marketing website with the same tools available in the executive bonus arrangement as well. The other one I want to talk about, which I don't have slides for, is the key person benefit. The key person is another arrow in your quiver when you're talking to business owner clients. Again, this is a little different than the retention element of an executive bonus arrangement. It's more for taking care of the business itself. You can have key people in a business that if that person is gone, that business could fold. I mean, they could have real financial issues if that person's not there. You could have somebody that has some maybe specialized knowledge, or maybe somebody that's a very good salesperson brings in all the new accounts. If those people are gone from your business is going to suffer, and you could end up having to close up shop. So the key person benefit.
So more protection for the business owner versus retention is a good way to think of it, I believe, right?
Exactly right. Yeah. And so we're ensuring those key people in the business, but the benefit is not going to the key person's family. It's going back to the business. And so, again, when you're thinking, who are your key people in your business? Who are those people that, it would cause a financial hardship to your business if they were gone? Those are your key people. And it doesn't necessarily even mean that they're your highest paid individuals in your business, because, again, they might be some people that just have specialized knowledge and specialized opportunities, maybe specialized contacts. Those are key people to your business, and having a key person policy on them can help that business overcome the loss of that key person. So again, with key person, the business does not get to deduct the premium because they are now the beneficiary of that policy. So they are not getting the deduction that they get with the executive bonus arrangement. However, they are setting themselves up for a financial stability in the future that can really help them navigate through some tough times if something were to happen to some of their key individuals. So we also have on our marketing website here at the top of the page there's a segment on the key person in there as well. So you can go in there, you can view the videos, you can go through the agent marketing guides, you can look at the client brochures. They're all available on that website, and again, does not require user ID or password. So again, I think where I'm going to call it quits, Craig, and just turn it back to you for maybe a couple closing comments. And I do appreciate you having me on here for North American to talk a little bit about the business sales marketplace.
Sure. Thank you very much for coming in and dropping a little knowledge on all of us on your expertise in the business solutions market. So yeah, thank you very much. I really appreciate everyone jumping on. My name is Craig Mira. I work directly with Senior Advisory Group. I'm looking through a lot of the names of everyone that joined today, and many of you I've worked with. Everyone I have not, I'll make you my first calls when we jump off the line here. But lots of opportunity here, again, within these exact type of markets. So again, thank you for everyone attending. If you have any questions, don't hesitate to reach out. My number directly is 480-240-2668. And join the remainder of your day. Thank you.